How you guys doing? I want to tell you what's going on right now. We've had a change in market action. The climate has shifted a little bit, and I want to introduce you to a concept that comes from the stock market, but applies to all markets. And that concept is churning inventory at previous highs. That's churning inventory at previous highs. And so what's going on is that since about 2012, prices have been rising in this area and really all across the United States. And we went into a phase there in 2017 and early 2018 where they were rising fast. In 2017, we had 11% price appreciation here on the Central Coast in 1 year. That's double digits. That's a very, very quick rise in prices. And it was like 10.2% all the way through like July or August of 2018. So we had like a year and a half or more where prices were moving up very steeply. And what's happened is that has now backed off. Year over year, we're now at 5.3% from September 17 to September 18. Okay, so in that specific 1 year period, prices only appreciated 5.3%. So it's backed off and prices are now moving up at a slower pace. There has also been a drop in volume. It's right about 15%, 15% in the number of sales happening monthly here on the Central Coast. And so what we've seen is prices are not rising as fast and there are somewhat less transactions actually happening here on the Central Coast. And that is just a general softening. That means conditions are softening and the amount of power that buyers have vis-a-vis sellers is now a little bit more because buyers haven't had much power. It's just been all sellers. Sellers could kind of demand whatever they want. They were all reaching for premiums, things like that. And that has now backed off somewhat. So what's going on is that I'm talking to people and I keep having the same conversation with people where they tell me that prices are moving down and that the market's going to crash. And what they don't understand is that prices aren't moving down. There's absolutely been no drop in prices. Prices are actually up, like I said, 5.3% from September 17 to September 18. And they're not dropping at all. What people are seeing is they're seeing on Zillow that prices are dropping for active houses, meaning that the ask price or the list price is going down. And the reason is that we just had 18 or so months of super fast price appreciation. And what sellers start doing is they start getting kind of maniacal and they think they can ask any price. And so they've got a house that realistically will sell at maybe $525,000, but they want to list it at like $575,000. And their agent's like, don't do that, don't do that. But they can't be convinced. They think their house is worth a ton and they list too high. And then they end up waiting and dropping, waiting and dropping, waiting and dropping. And then they sell it for about 525. And they could have got 525 and sold the thing, had it in escrow in like 3 to 7 days if they just had priced it at 525 when they started. And so people see that on Zillow, people see that on the MLS, realtor.com and so forth. And they think that prices are dropping, but that is not a statistical fact. If you want to Google California real estate statistics, do that and then go to the CAR website, car.org, and you can look at month over month and year over year price change statistics and sales volume statistics going all the way back to 1987. It's very informative and it's where I got this information from. So let's go to our concept, churning inventory at previous highs. When a market goes into a bear phase, prices have been going up and then they turn and they go down for a while. What happens is it puts a whole bunch of people underwater. And this happens in the stock market, it happens in the copper market, gold market, and it happens in the housing market too. Is that when prices turn around, they start to go back up. Once they reach those previous highs, there's a whole body of people that had bought at or near those the previous highs that are now suddenly not underwater anymore, and they get pulled back in. Meaning they bought for $500, the value of their house dropped to like $300,000, and they were underwater there for a long time. And so once prices reach $500,000 again, they go, oh my God, we can finally sell. We can get out from under this thing. And then there's a swelling inventory that rises as those people exit a position that they basically were stuck in for a long time. Okay. Happens in stocks, happens in housing too. And so I think that because we have now reached and just slightly exceeded the previous highs from the previous cycle, that those types of sellers are coming in. In the larger Paso area, we typically have between like 200 and 250 houses, single family houses that are on the market. That's everything that's active and everything that's also in escrow. And that actually swelled out to 303 in the early part of September and has now dropped down to 279 as of yesterday. So this is Paso and the rural areas that surround Paso. And so we saw inventory swell up right? And then all of a sudden there's a drop in volume and houses start sitting around, and that inventory is now getting chewed up and is from 303 down to 279. So I think that this stock market concept explains what's going on right now, is that we've reached the previous highs from the previous cycle. Sellers are getting drawn in who spent a lot of time, basically a decade or more, underwater, and those people are now able to exit a position without having to feel like they're selling at a loss. Okay, so on July 11th, if you want to go back and watch it, I sent you a video talking about two variables that are shaping the current market. And those two variables are the lack of new construction and the lack of bad mortgage products, meaning adjustable rate mortgage, neg-am loans, interest-only loans, and all that stuff that caused the last foreclosure crisis. And what this means is, because there has been very little actual new construction over the last decade, and they've made very few bad loans, the adjustable rates, all that kind of stuff, everybody in this cycle bought with 30-year fixeds. And in fact, the defaults, meaning people not paying their mortgages, are at an 11-year low right now, meaning we've never had less mortgage defaults that lead to foreclosure than what we have in the market right now today. And that means there's no bear market coming, meaning there's no significant, sustained, substantial price declines coming where prices are really going to drop down. But if we're churning inventory at previous highs, we might be in a sideways chop type situation where prices only move up a little and move down a little bit. And basically, I'm talking about going sideways over a period of time. I've been talking to other real estate professionals about this, and they always ask me, okay, so if that happens, how long is it going to last for? And that's a question I don't have the answer to. This could last 3 months. It could last a year and a half. I don't know how long it's going to last. What we see is a situation where it's difficult for prices to move substantially up because affordability is pinched and the interest rates are higher, but it's also difficult for prices to move substantially down because there's no foreclosures happening and because builders haven't built anything for an entire decade or more. So where's the extra supply going to come from for the inventory to swell up, and all of a sudden the sellers can't sell their house, and so the prices keep dropping? It's just not going to happen. And so I think we are in a churning inventory at previous highs scenario. I think it's a great concept that comes from the stock market. And I think that is most probably what we're looking at and what we're going to be looking at for some indefinite period of time going forward. If you are a potential seller right now, I want you to know that we've just exceeded just a little bit the previous highs from the previous cycles, which means you actually can list and sell your house right now for the highest nominal price that you've ever been able to. So it's a really good time to sell a house, although the amount of negotiating power you have vis-a-vis the buyers isn't quite as high as it was 5 months ago, 7 months ago, 12 months ago, 15 months ago. And then if you're a buyer, we've got a little bit of a swollen inventory and dropped volume situation where some of the listings out there have been sitting around for like 70, 90, 110, 130 days, which means there are sellers who have basically overpriced their property and it's been sitting around, and now they're finally getting realistic and it's been dropping price, and they've been hemorrhaging mortgage payments. That means you can come in and you can lowball those people. So we all of a sudden have some opportunity for buyers that simply hasn't existed over the past 2 to 3 years. So if you're a seller and you price your home right, you can get the highest nominal price you've been able to get basically for all of time, because we're a little bit above the highs from the last cycle. And then if you're a buyer, all of a sudden there's opportunity to lowball some of the listings out there. Whereas a year ago, 2 years ago, you talk to me, you talk to any other agent, and we'll tell you, like, you can't come in and start lowballing people because the sellers have all the power right now. So if you want to sell your house, give me a call at the number right here. If you want to buy a house, there's some opportunity that has not existed recently. Thank you. You guys are great. Talk to you soon.